Coca-Cola reported first quarter fiscal year 2023 results, and I wanted to look through those numbers from the perspective of a dividend stock investor. So I know many of the people that invest in Coca-Cola stock do so because of the dividend payment, the dividend yield. So when I'm reviewing the quarterly results, I'm looking at it from the dividend stock investor. So I'm looking at what happened in the quarter and measuring and asking, does that help the dividend? Does that put the dividend at risk? Does it increase the chance that Coca-Cola might increase its dividend? So those are all the questions I'm asking myself in my analysis of Coca-Cola's earnings results. So I've gone through the earnings, I've pulled out the key highlights, and I want to share them with you in this video. Organic revenue for Coca-Cola increased by 12% in the first quarter compared to the same quarter last year. Earnings per share also increased by 12% to 72 cents per share. The company increased its prices on its portfolio of products by an average of 11%, and impressively, unit volume increased by 3%. So even though the company raised prices by more than double digits, people bought more of Coca-Cola's products. Now, that's largely a result of the momentum from economic reopening. Coca-Cola has a larger market share in those areas, in restaurants. Think yourself, the last time you went to a restaurant, did they have Coke or did they have Pepsi? Most likely they had Coke. Coke has worked for decades to develop those relationships, and it's now paying dividends now that economies are reopening. People are spending a lot more time at restaurants and bars and theme parks and movie theaters and sports stadiums. Those are all areas where Coca-Cola has a greater market share than its rivals. And so that's boosting Coca-Cola demand for Coca-Cola's products, and that's partly why volume increased despite the fact that it increased prices by an average of 11%. Its rival, PepsiCo, raised prices on its portfolio by an average of 16%, but PepsiCo experienced a decline in unit volume. So PepsiCo raised prices more, but they also experienced a decrease in unit volume. So Coca-Cola, you could argue, has room to increase prices a little bit more without experiencing a decline in unit volume because it experienced a 3% increase in unit volume. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. For the full year, the company reiterated its target for organic revenue growth of 7.5% at the midpoint and currency neutral EPS growth of 8%. Now, the reason why Coca-Cola's earnings did not increase more is because commodity price inflation has increased its cost of goods sold. Uh, the company estimates that even in 2023, commodity price inflation will hit the company by mid-single digits, so 5, 6, or 7% will increase the company's cost of goods sold, from commodities. One troubling factor from Coca-Cola's earnings report was its cash flow from operations fell to 160 million. This was down from 623 million in the same quarter the prior year. Although the main reason for the decrease in cash flow from operations was not profit related, but it was more so working capital related. So changes in working capital, short-term assets, fluctuations in inventory, raw materials, things like that is why the company's cash flow from operations fell. And partly a result of the benefit from the economic reopening. If Coca-Cola is serving a greater number of customers right now, it's needing to increase the amount of its inventory so that it can sell more to its customers as economic reopening gains momentum, and especially as the latest market to reopen, China, really gets its economic reopening rolling, right? It's only been a few months that the Chinese economy has fully reopened. Overall, Coca-Cola's dividend sustainability increased in the current quarter for a few reasons. Most importantly, that it demonstrated its pricing power. The company raised prices by 11% and people bought more, not less, of its products. Typically, you have a relationship where you increase price and demand falls, right? You've all learned this in basic economics classes. Price goes up, demand goes down. But this wasn't the case for Coca-Cola in this quarter because the pent up demand from economic reopening overpowered the impact from rising prices. So that's great news. That's great news for dividend stock investors. That's great news for Coca-Cola investors. And that demonstrates the company has even more room to raise prices throughout the rest of this year if it chooses to do so, or if inflation remains stubborn and goes higher than expected. All of which is great news for dividend stock investors in Coca-Cola. So if you were interested in Coca-Cola and you were concerned about the dividend, or you just wanted to, you were already confident in the dividend and you just wanted to make sure you weren't missing anything, you can remain confident in Coca-Cola's dividend. There was no real serious red flags in this quarter that warns me to say, oh, Coca-Cola's dividend is at risk here. I didn't see anything of that nature in this quarter's earnings results. So, if you like this video, I've got several more like this one coming out over the next few weeks throughout this earnings season. I follow a lot of companies, I think over 100 companies that I'm following, making videos on. And over the last few months, I've, published an average of about 4 videos every day. If that's something that interests you, please go ahead and subscribe and turn on your notifications so you won't miss out on any of these videos that I make. And let me say finally that thank you so much for your viewership. I really appreciate it, and I hope I will see you again soon.